Welcome to RBC's Markets in Motion podcast, recorded December 22nd, 2025. I'm Lori Calvasina, Head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. In what will be our last podcast of 2025, we're digging into the year-ahead outlook for U.S. sectors, leveraging our own quant work on performance, earnings revisions, valuation, macro indicators, and flows, with the U.S. results of our 4Q25 RBC Analyst Outlook Survey, which was recently published. The big things you need to know? First, we're upgrading S&P 500 Healthcare to overweight from market weight. Second, we're upgrading S&P 500 Communication Services to overweight from market weight. Third, our other S&P 500 recommendations are unchanged. We remain overweight financials and materials, underweight consumer discretionary, and market weight other sectors. Among our market weights, we do have a preference for sectors that look attractively valued on our quant analysis, specifically consumer staples, energy, and REITs, over those that look expensive, specifically utilities, tech, and industrials, which have been the early beneficiaries of the AI trade. If you'd like to hear more, here's another 5 minutes. Let's start with takeaway number 1, our healthcare upgrade to overweight. Since October, when our trip to the UK made it clear investors were getting curious about this sector, we've been writing about how it was our preferred defensive. Things we still like about the sector today: reasonable valuations on our quant model, strong earnings revision trends which tend to benefit from a weaker dollar, as well as strong revenue revisions, plus positive flows, and a constructive performance outlook from our analysts in our recent survey, along with constructive assessments of valuation and demand. The sector's performance relative to the S&P 500 has also been moving inversely with tech over the past few months, meaning it's become a clear beneficiary of rotation. In our recent analyst survey, the U.S. sector's policy risk score remained elevated, and we do see this as the primary risk to our call. Moving on to takeaway number 2, our communication services upgrade to overweight. We liked this sector to start 2025, but downgraded it in July primarily due to a cautious turn in our mid-year analyst survey. One thing that jumped out to us in our December survey was that our analyst views have improved, and overall they now have a constructive view on the performance outlook, along with neutral valuation views and strong demand assessments. Looking beyond the survey, we see a lot of similarities between communication services and healthcare. In communication services, we also see positive earnings and revenue revisions, valuations are attractive, and flows are starting to perk up after a brief period of deterioration. It's also worth noting that both comm services and healthcare tend to outperform when consumer sentiment improves. That indicator has been weak but may be stabilizing around extreme lows. One key difference of communication services from healthcare is that our analysts consider the policy backdrop for communication services to be neutral or mixed. Another is that outperformance since late October has only been very slight. And we'll wrap up with takeaway number 3, our ongoing financials and materials overweights. Both have been solid outperformers since late October, but still have attractive or reasonable valuations on our quant work and constructive performance outlooks from our analysts. Improving soft data or business sentiment could help both sectors in the year ahead, as both tend to outperform when ISM manufacturing, which has been stuck in a rut, is on the rise. Financials also continues to have one of the most constructive policy backdrops in our analyst survey and tends to outperform when consumer sentiment rises. One knock on the sector is that flows have turned weak recently. Materials has been seeing negative upward EPS estimate revisions, but trends do appear to be stabilizing, and earnings revisions in this sector tend to benefit from a weaker dollar. After a big push higher, flows turned negative to this sector in recent months, but do appear to be bouncing back. And before we sign off for 2025, we do want to leave you with a few what we think are unique takeaways from our 4Q25 Global Analyst Outlook Survey, which we recently released. The survey summarizes responses from our analysts in the US, Europe, Canada, and Australia. A few things that jumped out. First, our global analysts generally have a constructive view on performance, valuation, demand, and the domestic policy backdrop heading into the new year. In other words, our analysts generally have a constructive bottom-up view heading into 2026. And second, the survey results highlight a bit more optimism from our analysts in the US and Canada than those in Europe and Australia going forward. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.